At one point today, Tesla stock was down over 3%. You have since recovered. At the time of recording this video, you're essentially break even on the day today. This could be a sign of a larger reversal to come. We have important catalysts in the next 48 hours that will really determine what happens next for Tesla. All things considered, we do have a lot of news to share as well here in this video. So, I hope you are ready. But first and foremost, only about 50% of you guys are subscribers to this channel. So do me a quick favor and hit that subscribe button if you have not done so already. It helps push the message out about Tesla stock and the opportunities that we see here going ahead. I mean, after all, full self-driving vehicles on a mass scale, humanoid robots everywhere. I mean, I don't see much that can top that, if ever. But remember, none of this is a financial recommendation. Contact a financial advisor if you are uncomfortable or do not possess the knowledge needed to make investment decisions. Now, overnight, last night, really during the Super Bowl, as Trump was in attendance, he announced 25% tariffs on steel and aluminum. This could have been part of the reason why Tesla stock, at least initially, sold off today. But rest assured, Elon Musk confirms that this is no problem for Tesla. And here you can see a post from Jeff Lutz that says, before anyone starts hyperventilating, Tesla builds about 99.7% of its vehicles sold in China inside of China. None of those vehicles are subject to the proposed tariff. Only 0.3% of vehicles would be subject to the 15% tariff if imposed. And Elon Musk confirms that this is correct by commenting and saying, yeah. And really these days, it seems like investors jump to conclusions faster than I've ever seen before in what's negative for Tesla. Something happens, you get a scary headline, people just assume it's negative for Tesla. And they don't even know. And I think that was part of the recovery story today for Tesla stock. And after all, the stock has fallen a lot from its all-time high. You are now down about 26%. At the low of the day today, you were down 28.5% from all-time highs. In fact, we actually have some really good news today. President Capital adjusts their price target on Tesla to $426 per share from $278 per share, and they also maintained a buy rating. And in new 13F filings, apparently BlackRock just bought more Tesla shares. BlackRock bought 6 million additional shares of Tesla for their different funds at the end of 2024, with still multiple other 13F filings that need to come out for the remaining funds that have not already put them out. Now, I personally don't think this is super shocking, especially when you look at like the option activity. Okay, the option activity over the past week has been 76% positive, about 2,000 different trades totaling $2.73 billion. If you look at today alone, you have 131 different trades totaling $334 million. Get this, with a positive order value of 94%. So there's almost no bearish option activity today from hedge funds and institutions in Tesla stock. I don't know about you guys, but $300+ million in option activity being bullish is a pretty good sign that maybe this is not the end of Tesla stock's existence as we know it. It seems like a lot of people have gotten extremely bearish on Tesla when in fact, we haven't really had any bad news. Of course, we had that news that deliveries were down like 60% year over year in January in Germany and other countries in Europe. And that's going to happen when you introduce a new model that is disrupting the previous best-selling vehicle in the world, right? People are going to opt to wait for the new Model Y or Tesla is probably slowing down production of the old Model Y and getting ready for mass production of the new Model Y. Like, that makes sense. That shouldn't have been like bad news because it was, I mean, anyone with half a brain expected that. Besides that whole situation, you haven't had any bad news to drive down Tesla stock 28%. And it does seem like hedge funds and institutions, BlackRock, and really the whole gang here is saying, oh yeah, we want to buy Tesla at these prices. Also in the news today, Lyft to launch Mobileye-powered robotaxis as soon as 2026, starting with Dallas. You know, you get a lot of claims like this over the years. I firmly believe this is a show me kind of story. But hey, we'll see. I don't necessarily think that's why Tesla sold off so much today. Like anyone's really concerned that Lyft and Mobileye are going to be an impactor in the robotaxi field for Tesla. But I wouldn't be surprised. Wall Street, you know, sometimes they're just not the smartest folks. And for everyone that seen the Harrison Ford Jeep commercial last night, there's a lot of controversy, if you will. I mean, he's an actor. He you know, says a script. He gets paid for it, whatever. But he actually drives Teslas, multiple Teslas, a Model S and what appears to be a Model X. Sorry, he does not drive a Jeep Wrangler from what we can see. Ted Meyer on X says, quote, I noted multiple cybercabs driving around Giga Texas today. Here are just a few of them for your viewing. It seems like they are really trying to collect a lot of data as the routes are being changed around. To answer a common question, all of this training is done on Tesla's property, not public roads right now. So you are seeing the cybercab that is, you know, out there taking test drives, and well, that's a good sign for our expected launch of the robotaxi network in Austin, Texas in 2025, specifically in June. Now, we can also see the Tesla China Shanghai Energy Factory ceremony start time for US time is February 10th at 8 p.m. Central Standard Time, so about 9 p.m. Eastern Standard Time. South Korea, it's February 11th at 11 a.m. And in China, it's February 11th at 10 a.m. So here, actually tonight, you will be getting the start of production for Tesla's new Megapack factory in China. Tesla short sellers today look like they're shorting about 188,000 shares on net today. When you take the shares that are being covered and, you know, minus that by the shares that are being sold short today, you come out with 188,000 shares on net that are being sold short. You do have 2.26% short interest of free float, about $23 billion sold short in Tesla, totaling 63.24 million shares. And also in the news today, Trump says that Elon Musk will help expose hundreds of billions of dollars in government fraud, targeting the Department of Education and the Pentagon next to essentially be audited. Trump also says that the Doge effort may have found fraud in treasuries. That would be a very interesting development. Now, in other market headlines today, it has been a pretty slow day out of Washington, and there's not really too many headlines today that are moving markets per se. But Brazil's president says that they are planning to impose tariffs on U.S. tech firms if Trump goes ahead with plans for steel tariffs. And it looks like that just happened. So we'll see. This is probably not something markets are going to react to unless you're a big tech company doing business in Brazil. That, you know, that's a large portion of your revenue, but that's not the case. Not at least for most companies. You can also see the German Chancellor Scholz said this about the Trump tariff threat, quote, "Those who impose tariffs must expect retaliatory tariffs," so threatening a larger trade war. But again, Europe, as long as it wasn't something too dramatic, is probably not going to be a big focal point for investors. And Mexico's president says we are going to wait to hear if Trump announces tariffs on steel and aluminum imports. And well, this was said 10 o'clock in the morning today, and that was already announced last night. So who knows? I think she's referencing like what countries would this affect? So we'll have to see. In the news today, January 1 year ahead and 3 year ahead expected inflation was flat at 3%. January 5 year ahead expected inflation at 3% versus December's 2.7%. And even Nick Timmerhouse on X says, in the New York Fed's consumer survey, inflation expectations at the 1 and 3 year horizons were unchanged in January, opening up a notable gap with the University of Michigan surveys, which showed big increases in January and in February. You could see the New York Fed is like flat, and the University of Michigan is straight up. That is because Democratic respondents skewed the numbers to the upside. Republicans expect no inflation, independents expect like 3% inflation, and Democrats expect over 5.5% inflation, which really pushed up this headline number. What's interesting is the New York Fed is usually higher than the Michigan Consumer Sentiment Survey, right? The University of Michigan's inflation expectations survey as well, to be specific. And well, that has not happened, in a while. Minus, 2024 briefly in the beginning of the year, you really never have the University of Michigan's survey that is higher than the New York Fed survey. So maybe we could see University of Michigan's come down in the next couple of months. Goldman Sachs bull bear indicator remains above 70%. I don't give a whole lot of weight to this because it's picking out specific variables like the Schiller price index. Okay. I just don't think this matters too much. According to Sentiment Trader, the S&P 500's 1 year Sharpe ratio has peaked, which historically leads to periods of volatile/moderate returns. And well, we will see. This definitely does have some correlation to historical precedents, but again, it doesn't mean that we have to see some kind of big crash. I mean, that's pretty much the same as saying, hey, the Eagles won the Super Bowl last night, so that means we're going to crash and have a bad year. Like that sounds ridiculous, although there is historical precedence for that. Like if you're solely looking at the data, anytime Philly, the Eagles, win the Super Bowl or win the World Series for baseball, something bad happens. I mean, the Great Depression, 1929, 1930, Phillies won the World Series. Okay, 2008, Phillies won the World Series, Great Recession. 2018, stock market had the worst year since 2008, Eagles won the Super Bowl. Like, there is a lot of historical precedence for that, and it's almost followed to a T in the last 40, 50 years, but doesn't mean that we're going to have a bad year because the Eagles won the Super Bowl. Like that kind of sounds ridiculous. Now, part of the reason why Tesla stock may have been under some pressure in recent weeks, although I'm not going to paint the picture here like this is the number one reason, this is definitively what's been negatively affecting Tesla. There's no way to quantifiably say that with any degree of certainty. But some people may be saying, if Elon's spending so much time at Doge, how is he running Tesla? And I will just rebuke that with saying on the conference call, Elon did not seem out of the loop, okay? Elon seemed like he is full-fledged running Tesla. So until proven otherwise, I don't think there's an argument there. Now, Tesla owner Silicon Valley says Elon Musk couldn't care about your social security number. He is following fraud and waste payments. He worked at PayPal with 100 million users' private information, and he works at SpaceX that has highly classified information. He has never done anything wrong with this type of info. And again, you're getting a lot of government pushback towards Elon that may be kind of clouding the Tesla story right now, which people should really be focused on. Autonomous vehicles, robotaxi coming in June, FSD entering the Chinese market soon, the new upgraded Model Y, cheaper vehicles coming this year, and, well, humanoid robots. How could we leave that out? Like, you're going to set all of that to the side to take a political position on what Elon is doing and factor that into your investment decisions. that's never going to age well. Meaning that if you are bearish on Tesla because anything Elon Musk is doing at Doge, I think you're missing the whole story here for Tesla stock. And sure, could Tesla fall further from here? Of course, I had some people in the last video, that said, clearly you're not looking at the technicals, blah, 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 things like that. And yeah, I am. I acknowledge that you could fall to this 100-day moving average around $334 per share. Honestly, we're at $358 per share. If that happens, big deal. We're almost there as is. That would be a decline from here of about 6.5%. We've seen worse. Now, I think right now is an opportunity nonetheless, and that's kind of the point that I have been making and hopefully pointing out, that you can't always assume you're going to catch the bottom of every move. You have to take opportunities when they are presented to you. And sure, could we fall a little bit more from here? Of course, but I think you are presented with an opportunity now as the stock is down 26% from all-time highs. And I personally think the stock's going to be a $900 stock by the end of this year. I don't give a rat's ass if it goes to 330 versus 357. That's pennies in the grand scope of things. But my ultimate point is, could you continue to see financial media and hedge funds and institutions, some of the more bearish ones, kind of push the narrative that Elon's not as focused on Tesla, that Elon is going to cause problems? Okay, yes, you can make that argument. And, for uneducated, lackluster investors, that could make sense to you if you fall in that category, which I assume if you're watching this video, you do not. And if you don't fall in that category, you really want to be focused on what Tesla is doing. And from that perspective, Tesla is doing everything right. So I just think you're getting a massive discount in kind of a unique situation. Not too often do you get an opportunity where nothing is going wrong at Tesla. Everything is going right at Tesla. Tesla's doing all of the right things, but the stock is selling off for reasons that have nothing to do with that. Normally, it's like deliveries are slowing down, or margins are getting worse, or they're delaying, a vehicle launch or something. Like, that makes a little bit more sense why you would sell off. But to sell off because of Elon and Doge and things that have nothing to do with Tesla, I mean, it's like selling your portfolio and, spending all of your money today because tomorrow the world could end. Like, there's kind of no connection there. And that's kind of the same thing between Tesla, Elon Musk, and Doge. Or I guess if you want to use analogies to this, it would be like breaking up with your girlfriend or leaving your wife and your kids because she may leave you someday. I mean, I guess some people do that sometimes, but probably not a logical thing to do. And I think that's a great example or analogy of this, because people are leaving Tesla because of, well, what could happen, which logically nothing could really happen to Tesla because of what Elon is doing. Unless Elon Musk were to get thrown in jail or something unprecedented, or Trump loses the presidency or something just wildly speculative. There is zero connection between Doge, Tesla, Elon, any of that. Now, as Squawk Square says on X, it took about 20 years to build the Tesla brand and about 2 years to ruin it, thanks to this man. And again, this is very emotional trading and investing, okay? Nothing has changed. And while I can't make a guarantee on that, nothing has changed. If anything, Elon could actually be a positive for Tesla from a selling cars business by opening up Republicans to the Tesla brand, which may have not been too exposed to Tesla in the first place. If you are a Democrat and you do not like what Tesla is doing, but you want an EV vehicle, I mean, what are your options unless you're going to pay, dramatically more money? Like, sure, you can buy a Rivian, great. It's like almost twice what a Model 3 is. Go for it. Have a ball. But a lot of people are not going to be in that scenario. They're still going to buy the best product they possibly can for the best dollar, and that is a Tesla. And it will be a Tesla for the foreseeable future. But now you may actually have Republicans opening up to buy EVs, which maybe they were not in that kind of area before. So that's just one thing I'm noticing, is a lot of people that are emotional, that are trying to draw conclusions and make bold claims that really have no justification from an investing standpoint. And I would just urge you to not fall into that trap. This is kind of like Meta in 2022, it feels like, where everyone thought like Meta was going to go out of business. Okay, nobody's saying Tesla's going to go out of business, but people are starting to say Tesla's going to have all of these issues because Elon and his political affiliations, and that's just not how corporate America works. It's not how humans work in nature. But nonetheless, sentiment over on StockTwits is neutral at 47. Yesterday, it was neutral at 53. Message volume today is normal at 52. Yesterday, it was low at 39. And the participation ratio today is high at 55. Let me know what you think about this information down below in the comments section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.